Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden stories within your favorite company's filings. Today we're diving into Mawson Infrastructure Group Inc., and it looks like they've been on a bit of a roller coaster ride with the Nasdaq. Let's see what is really going on. Before we dive in, if you appreciate getting straight insights from these corporate documents, make sure you are subscribed. We've also got a Discord community linked in the description below where we discuss these filings and more. So what we have here is a Form 8K filing from Mawson Infrastructure Group Inc. Think of this as a current report, basically telling us about some important stuff that just happened. The date here is the 16th of December 2025, and that is the day they got some pretty significant news from the Nasdaq. Now, the big headline grabber is that Mawson Infrastructure Group Inc. has received written notice from Nasdaq confirming they've met the requirement for a minimum bid price of $1 for staying listed on the Nasdaq capital market. This is a pretty big deal because not meeting this could mean getting kicked off the stock exchange, which nobody wants. You see, they were previously notified that they were not meeting this bid price requirement, and also another one called the Market Value of Listed Securities, or MVLS rule. Basically, the price of their stock had dropped too low, and the total value of their shares had also fallen below a certain threshold. To fix this, they had to go in front of the Nasdaq hearings panel. They presented a plan, and part of that plan involved focusing on a different requirement, the stockholders' equity, which basically means the actual money owned by the shareholders after all debts are paid. They were given an extension until the 19th of December 2025 to show they had at least $2.5 million in stockholders' equity. And here is where things get interesting. Mawson has been selling shares of its common stock through an at-the-market offering. This means they've been selling their stock little by little directly into the market for an aggregate offering price of up to $40 million. They've already sold quite a bit of stock, raising about $13.2 million. This selling of stock directly impacts their stockholders' equity. The more stock they sell at a good price, the more their stockholders' equity goes up. It seems like they've been successful enough in this offering that they believe they've now met that $2.5 million stockholders' equity requirement. They are now waiting for Nasdaq's official confirmation that they've met all the criteria to stay listed. Now, it is important to note that this report also includes what they call forward-looking statements. These are essentially educated guesses about the future. The company is saying things that might happen, like their ability to continue raising funds, maintain their listing, and all sorts of operational risks. They list a whole bunch of risks from the fluctuating prices of digital assets like Bitcoin, to problems with electricity sources, equipment breakdowns, cybersecurity threats, and even changes in regulations. They are also mentioning the evolution of AI and high-performance computing as both an opportunity and a challenge. It is a heavy list of potential pitfalls, and they are being very transparent about the uncertainties they face. The report is signed by Khalis Saloom, who is the Interim Chief Executive Officer, General Counsel, and Corporate Secretary. This tells us that the leadership is aware of these issues and is taking formal steps. So, what is our take on Mawson Infrastructure Group Inc.? Well, it looks like they've managed to pull off a pretty significant win by regaining compliance with the Nasdaq bid price rule. This is a huge relief and likely prevents immediate delisting. The at-the-market offering has been a crucial lifeline, allowing them to raise the necessary capital to boost their stockholders' equity and satisfy Nasdaq's requirements. It is a smart move to issue new stock when the price is somewhat stable to raise funds without diluting existing shareholders too much. However, this is not a sign that all their problems are over. They are still facing a very volatile market, especially in the digital asset space. The company's reliance on Bitcoin and other digital assets means their financial health is tied to the unpredictable swings in cryptocurrency prices. Plus, the extensive list of risks mentioned in the report, from operational challenges to regulatory scrutiny, are very real and could easily impact their future performance. They're essentially walking a tightrope, balancing the need for capital with the inherent risks of their industry. The strength here is their ability to identify and execute a plan to meet listing requirements, demonstrating a degree of resilience and proactive management. The weakness, of course, lies in the external factors they can't control and the ongoing need to raise capital, which can dilute existing shareholders. The opportunity lies in leveraging the AI and high-performance computing market. But this is also a complex and competitive space. In conclusion, Mawson Infrastructure Group has cleared a major hurdle, but the path ahead is still challenging. Investors should keep a close eye on how they manage their operations, navigate market volatility, and continue to secure funding while mitigating the numerous risks outlined in their filings. Alright, that is our breakdown of Mawson Infrastructure Group Inc. Its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.